Hello and good day to all friends. This is Moshtaba Rasti from the Thales team, and today is February 6th, 2026, and I'm here with you with a midterm review of Bitcoin's situation, looking at the incoming options trades from last week or the week before. Up to date for the expiry of next month, after a period when it wasn't possible to update the analyses, I'm here with you again. Alright, let's go to the market screener and see what perspective we can get from the trades and options. So I'm setting the database to processed, and that's because the trading volume becomes more reasonable and we can analyze it more easily. Look, if we look at the chart on the weekly chart, we can see that the price is really fluctuating a lot. Right now, there's no apparent support in front of this drop. It's been 3 weeks that we've been in a downtrend. It's been especially scary for the past 2 weeks, meaning this weekly candle and actually the previous weekly candle. So I'm going to focus on the trades that entered during the last 2 weeks in the market screener. That is the point where this fear was created, and a change has occurred in the market. So we're taking entry trades from January 23rd onward. Up to this moment, for contracts expiring at the end of February, the database has been processed first and foremost, and open interest is positive. Only the trades that are still open, of course. We have a curve like this. Look, we have a curve that shows the entry trades from the beginning. In fact, if we consider February 23rd, we have a curve that oscillates with a low of 78, maybe even 75, a profit peak at 93, and a high of 106, which shows where we are right now. As you can see, we've come down sharply from above. It's basically a crash-like situation. There's a sense of fear in the market. Now, this fear has various reasons, from the changes that have happened in the US economic and financial system, the growing threat of war in the Middle East. All of these can actually be the reason behind this game and this event. And as you know, it's not just about Bitcoin. Strangely enough, silver, gold, and other assets are also experiencing it right now. They're all going through heavy corrections, and you can see that we've long since passed the expected bottom. You can also see with the delta, we're reaching the end. You see the delta peak here, it's 56, and the sale of puts goes up to that point. It continued, but the curve shows that we've even gone past the expected bottom. If we move forward, you'll see this volatile situation is still swinging between the highs and the lows. The only point here is that as we move forward and get deeper into this fear, meaning we enter these bearish candles, you can see that the high has come down a bit. Now, if we go further, it becomes even more apparent. Look, here, the high dropped to 99. From over 100, it came down to 99. Let's go further. Look, it dropped to 89. This means that this is showing itself even more, and even the overall curve, look at it. It takes on a downward trend in trades that, for example, started from February 3rd. The difference is that these puts that were bought here, look. From here, the delta, along with the price drop, is downward. This means puts have been bought, and on the upper side, we have call selling. The point about this area is that as it moves upward and calls are sold, the red curve enters profit. See, here it enters profit, while for the red curve to actually become profitable, on the downside, the trader has to pay a premium. From where we are now, you have to see that the entire area is at a loss, and you have to accept the loss. You need to pay the premium so that, for example, here, according to the red curve, below 42, it enters profit. If we go further, you'll see again, yes, it becomes volatile once more. Later on, with 4,500 Bitcoin from February 5th, it becomes volatile again, and here you mention the hope that we have. And around 65, anything below that is at a loss, but moving upward, we have a profit peak at 87 and a ceiling at 92. Alright, so that was the story at the end of February. Let's take a look at March 27th. March 27th, though, the conditions are completely different. It shows a downward trend, which we've now reached. Look, this is for March 27th. The trades that entered from January 23rd see profits below 66, which we've highlighted, and based on delta, this could even drop down to 52 or 51. And if we move forward, slide the slider ahead, you'll see not much really changes. That bearish outlook still remains. That's the prevailing sentiment. That's what can be inferred. Now, based on what we've analyzed so far, it seems like we could go even lower. I mean, all the way to the bottom of this range we're seeing here. By the end of February, we've really dropped a lot, as you can see. Here, as we mentioned, we've dropped below our expected bottom, so there could be a rebound here up to 93,000 or 99,000. Now here, 106 has been mentioned as a high number, but considering the current market situation, but if we move forward, as we saw in recent trades, the ceiling here is up to 90, for example. It seems that by the end of February, we could see a rebound to the upside, but for March trades, in the last 2 weeks, after we mentioned these two strong bearish candles, it's seeing March as completely bearish. It's really interesting. Look, it's seeing a completely bearish trend now, meaning that even when we look at recent trades, it's still seeing profits below this 66 level, even lower, down to 51. We talked about this possibility that it might come down, and now that we're here, let's take a look at April as well. When you add April too, April also becomes volatile again. April becomes volatile again. And yes, look here, the recent trades look just like a put sale. They've seen this area as the bottom. They've seen this area as the bottom. And again, the trades that entered from February 3rd for the end of April have pushed the bottom even lower. Look, even 58, for example, even lower than that. See, 58 has also been pushed down as the bottom. So it seems like you should probably expect even lower numbers. And here, it's possible that by the end of February, we might see a rebound upwards. After this sharp downward leg, eventually it has to stop somewhere. It can't just keep going down like this. Here too, you see this drop. Eventually, there will be a bounce back. At some point, it has to stop. Here, as we mentioned before, this has been an important range in the past. This was Bitcoin's previous high, so we'll probably see a pause here and a bounce upward. But it seems like this will continue like this until the end of February, but for March, it's still ongoing. The situation, is still... The downward trend still seems to be continuing, at least so far, in the trades over these past 2 weeks where this fear has settled in. Okay, let's move to the end of February and... Let's go! Let's increase the trade volume, the size of the trades, and see what we can gather from it. Alright, let's zoom out a lot. Because the number of trades is high, 100 Bitcoin, 81, 150 Bitcoin, 22. Let's lower it a bit. For example, 110 Bitcoin, 33 trades. Exactly 120. Bitcoin, 32 trades. 130 Bitcoin, 204 trades. Do you want to analyze these? For 130 Bitcoin and above, the overall shape of the curve still has that same volatile pattern. The 73rd floor, which we passed a long time ago. And let's see what big trades we have. Look, for the end of February here, we have a really big trade. 1,700 short calls at 105. Very interesting. For February 27th, 2026. January 23rd. Actually, January 23rd. So, for example, it was probably around here, around January 23rd. Yeah, it was right around here. This trader entered on January 23rd with 1,700 short calls. This trader was probably caught off guard too. Maybe they didn't expect that we'd move down like this. For the end of February, they saw 105 as the ceiling with 1,700 Bitcoin. What else do we have? Any other big trades? Let's see. Look here. We have two 500 Bitcoin trades here, which aren't even part of a strategy. We have two 500 Bitcoin trades that are short puts. 70,000 and 75,000. Once 75 is passed, 70's passed too. This one probably got caught off guard too, and maybe didn't even see this lower level coming. Alright, here again actually, there are two. Look, another 500. 500 Bitcoin entered on February 5th, short put at 65, which was triggered. And this one is a long put. 50,000. This one's a bit scary. This trader has considered a 500 Bitcoin long put at 50,000 for the end of February, meaning it might even go lower. The last big trade we have was entered on February 5th, just yesterday. 800 Bitcoin short call at 88. Look, again, it was entered yesterday, and from these areas, there's a chance of a pullback to 82. He's watching up to 8 here, expecting a possible pullback to this level. Short call at 82, 88. Alright, let's see the strategies. We can check what strategies we have. Look, we have this one. It's a relatively light strategy. Take a look. 30 sets of Bitcoin. 30 sets of Bitcoin. Actually, it's a short straddle, which we've already moved past quite a bit. Now look, it sees 81 as the floor, 98 as the ceiling, and its maximum profit is at 89.90, right in the middle. See, this shows that this downward move caught a lot of people in the market off guard. Look at how many people, the strategies they've chosen, and the volumes they've taken. What direction were they aiming for, and which path did the price actually take? So, is this probably another short straddle? No, this is a long straddle. A long straddle. And, well, it's just uncertainty, covering both directions. It was likely assumed that the price would move downward. If it went below 76,000, this strategy would have turned a profit. Let's look at the strategy here again. Do we have it or not? Yes, we have it. Both of its blocks are equal. Yeah, this is also a strategy expecting a quick move. Actually, it's a ratio strategy, expecting a rapid move upward. That's what was anticipated, up to 96, and then the ceiling would be 105, but again, the price moved in the opposite direction. When was this entered? February 2nd, that is right in the middle of the panic that hit the market. This was actually entered with the expectation of a quick move up to 96. Of course, it's still possible, since the expiration date for this strategy and the others is February 27th. So it's also possible that we'll see a quick rebound from here to the upside by then. This strategy itself is factored in 95 until the end of February, and it was just entered yesterday. It's new. And we have this one. This is also a strategy for the term strategy, which right now I'm not sure about. This is another floor that's been seen, which is basically a put selling setup. 63,000, 63,000. 63,500 is basically the floor it's identified for the price. How far did we come down? Yeah, we actually passed 63. We even went below that. So right around here, according to this trader, it could also be the bottom, and we might bounce back up. So these conditions suggest that we'll probably see some volatility until the end of February and then head upward. Maybe up to 80,000. Up to 90,000 at first, up to this point. Now, whether we can break through that is another story. But, as we said, for March, it looks like we can expect the price to go lower again. Maybe the story's already over. I don't know. We'll have to see. Well, look, both March and 40 actually. Bitcoin at 40, Bitcoin. And let's see. Sorry, 40 options trades? 40 options trades from 130 and up. Right now, we're talking about 200 Bitcoin and up. Again, you can see that the trend is bearish. And look here, for example, since January 23rd, 1,800 Bitcoin short calls. We had 106, meaning for that point, 106 was considered for the end of March to January 23rd was the last trades we had. Look, they're all long puts from February 5th, right behind me here, long puts. See? For 65, 65, 65, for 65,000, they were looking below 65. Here we have 1,200 Bitcoin long puts, 7,003. They were entered in February and have been realized. These were actually our big ones. You can mostly see it too. It's clear just from the type of trades that put buying puts were really dominant for March. It seems that we can expect another move back down. All right. Now, if we want to look at the strategies, well, actually, let's not go too deep into analyzing all the strategies. It takes time, but the perspective we've gained is that probably by the end of February, there'll be a move back toward 98,000, 88,000, 90,000, and so on. After that point, there will probably be another move downward, because if you look at the weekly chart, the moving average hasn't fully entered the overbought zone yet, as you can see. Our RSI has just entered the overbought area at 26%, but the moving average has not entered yet. The moving average still hasn't reached the overbought level. For example, look here. Here, the RSI enters the overbought zone, but the moving average hasn't reached it yet. There's a pullback, the price drops again, and there's a bit of back and forth here. It keeps moving until the moving average reaches the overbought level, and from there the price takes off. But Dries, now we have to see if the same story is likely to repeat itself here. So here, our RSI might make a pullback. Because it's moved away from the moving average, it could return toward the moving average, and during this time, this is what's happening. The moving average also comes up to the overbought level, and here it's likely that a pivot might form, causing the price to actually reverse direction. Keep an eye on it. Thanks for your attention. I hope this has been helpful, and until the next analysis, goodbye.